Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 13, 2022. Let's take a look at Infosys. Infosys is a Indian IT company or information technology. Stock price is around $21 and the market cap is about $89 billion. And stock is down 10% from 52-week high. That tells you it's in a correction territory right now. And this company is one of the best companies, and it's collaborating with Bloomberg, as you can see here on the Digital Economy Index. And Infosys is also recognized as one of the leader in most ethical companies for the second consecutive year. So it looks like company is doing something right, and stock came tumbling down today. Let's take a look and see if it's worth buying here. So with that, let's jump in. Look, from a leadership perspective, we got leader here, Mr. Salil Parikh, and it looks like he's got about 73% rating here. Not the great rating, but not bad either. So with that, looks like he's trying to do the right thing here, but the rating can improve from here. So with that, let's look at a little more detail. Look, Infosys, they provide software consulting, technology, outsourcing, and digital services in North America, Europe, India, and so on and so forth. And look, yearly performance is down 10% and market cap is about $89 billion. And look what happened. Stock has been doing great. Look, 2020 and 2021 were very good years for this company, and finally stock came tumbling down after announcing the quarterly earnings. As you scan through here, you could look at good support level around $21 here. So I'm a buyer here. I'm buying slowly. It's one of the good company. Anytime stock falls down, look, one drop here, recovered pretty quickly, and some small blips here and there, but it managed to recover nicely. That's why this time is no different. I think we should buy this great company at these levels here and accumulate. From an analyst perspective, it has a hold rating right now with the 1 buy and 3 hold and 1 sell. It's not widely covered because it's a Indian based ADR. That's why it's not widely covered, but it's one of the good companies. And look, we got earnings announcement here. Infosys falls 3% as Q4 earnings and revenue miss. That's what's going on. They missed slightly, but Wall Street does not like it. And this is a profitable company. And looks like the cloud division is growing very nicely, and there is a good momentum in the deal, and they got a lot of deals in the pipeline. And nice 21% revenue growth, even though it fell short of estimates, but there's a nice revenue growth here. So that's why I feel at these levels here, it's probably good to look at this company. And if you don't have it, or even if you have it, it's good to accumulate. That's a very good opportunity at this time. Look, big time down here. You rarely get this opportunity. A company like Infosys, it's good to slowly start buying up here. All right, from an analyst estimate perspective, look, current stock price is around $21 and their low estimate is $22. High estimate is $32 and mid level is $27. That tells you, even though stock is down here, there is a good analyst recommendation here. And one thing I always love is whenever there's a technical tells you, hey, it's a sell, and fundamentals say it's a good company, that's when you got to slowly start buying the company, because technical level sell indicates it's oversold at these levels here. Fundamentals are telling you it's a profitable company, no need to worry. So that's why you got to start buying at that level. That always proves to be a good decision. So with that, let's jump in here and look at competitive landscape. All right, from a competitive landscape perspective, look, we got Infosys and its industry peers here. Top of the list is Accenture. Many of you know Accenture. It's a great company. If you don't have exposure to Accenture, I think it's good to buy at these levels. Look, RSI is 45. Stock has been selling off, as you can see here. It's one of the great company. Look, market cap is around $206 billion. It's a good one to buy at these levels. Then you got IBM. It's an old dog trying to learn a new trick. And this is also okay stock. Whenever it has its moments, it falls off big time after the earnings. That's when you buy IBM, but it's a good swing trading opportunity. Look, it's lost money for investors in last 5 years, so I would not call it a long-term investment. Clearly, Accenture is a long-term great investment, but IBM is not a long-term investment. But if you're a swing trader, you could buy IBM after the quarterly earnings when it's really down. It happens a lot, and then you can sell it off when it recovers. Whereas Infosys, which is the third largest company, it's an Indian software company or IT company. Look, this has got nice 5-year growth here. 222% performance in last 5 years, even better than Accenture. Even 2 years, it's got a nice 160%, even better than Accenture. And look at the profit margin here. Net margin is 19%. It's one of the best in this industry here. Even Accenture has got 11%, whereas Infosys has got 19%. And look at the RSI. Stock is completely sold off here after this huge big drop here. It's a great time to buy some Infosys. Look at the drop. 1 day, 5 day, 10 day, all the way to 6 months here. You could buy this great company. Look, they got about $2 billion on their balance sheet here. No need to worry about cash. And they got $3 billion free cash flow and very good 89 overall score. It's a rock solid company. And we got a few more, as you can see here. We got FIS. I also like this company. And this one has got a little bit higher RSI. Right now, I would wait for a pullback. This company always gives you nice pullbacks. Right now, I would wait. RSI 55 is a little high for me at these levels. And we got one more, Indian-ish company, which is Cognizant Technologies. You could buy this one also. Look, it's also RSI low here, 40. Stock has been falling off here. You could buy this great company also. Look, it's got nice overall score. And look, they got a lot of cash in the balance sheet and also good free cash flow here. And we got a few more, as you see here. Keep watch on the net margin here. You want a net margin, very good net margin company. And look, we got FLT FLEETCOR. This is also a wild trader, as many of you might be knowing here. Look, it's doing very well and 78% performance here. But right now I would wait. Look, it's RSI is 65. That tells you it's already hot here. We should wait for a little pullback here. And as you scan through, we got a few more with nice overall rating here. We got Wipro. It's again another Indian company. Nice 16% net margin here. This also made money for you in last 2 years and 5 years, even 1 year. You could buy this also. Look, RSI is very low here. Looks like many of these IT companies are cooling off here. You could buy them at these levels here. All right, so as you scan through here, we got a few more here. We got Teradata. I would not go here. There are better cloud-based database companies. I would not go here at this time here. So with that, let's jump in and look at Infosys in a little more detail. See if it's worth buying Infosys up here. All right, so with that, let's jump in. Infosys, from a quick snapshot perspective, look, it's $21 stock here. Stock came tumbling down, and it's a big company. Look, it's got 259,000 employees. It's a big company based in India. And look, they are down from 52-week high about 19%, and year to date it's down 10%. And as you see here, it's doing pretty okay. And look, they got $15 billion sales, not too bad at all, and nice net margin. I like this net margin here, 18%, as you can see here. And next year, from a sales perspective, there is a nice sales growth for next year. Analysts are bullish this company will do well next year. And EPS growth, this company makes money. Look, there is actual earnings here, earnings per share, and EPS for this year, next year, next 5 years, all positive. That tells you it's a growth company here. From a P ratio perspective, it's a mid range here, 33, not too bad for a software or IT company. Price to sales ratio perspective, it's relatively cheap at these levels here. From a financial perspective, nice cash, look, $2 billion cash, not bad at all. And there is some debt, very much manageable, not too bad. And it also pays a dividend. Look, it pays some dividend, free cash flow positive company. So from a financial perspective, no hair on this company. It's pretty good. From a performance perspective, look, last 6 months has been down. That's why it's a good time to slowly start buying this company. They will bounce back pretty nicely. And from an RSI perspective, stock is sold off here, very low RSI, just 27. And look, from a SMA, simple moving average perspective, it's down from its 10-day, 5-day, 20-day, even 50-day, 200-day. It's pretty much down, as you can see here. And from a Bollinger Band perspective, look, it came below the lower Bollinger Band here, 9% below its 50-day Bollinger Band and 60% below its 20-day Bollinger Band. That tells you stock is completely sold off here. And right now it's not yet, it's at its 1 month low here, very close. So at these levels, it's a good one to buy here. From a VWAP perspective, VWAP is telling you stock can bounce back here from the current price around $21. It can go slightly higher, and 20-day VWAP volume weighted average is much higher. So from an industry benchmark perspective, look, it's got a good score here, good value score, 76, tells you valuation is low, good growth score, growth is good, profitability score is great, it's a profitable company, financially Altman Z score is great, Piotrowski F score tells you the books are improving, financial positioning is improving. That's good to know. From a Morningstar Health perspective, financial great, grade A here, fundamentally rock solid. Growth, profitability, growth, it's a rate C here. It's a middle of the road here. And nice performance in 2-year as well as 5-year. And look, it also pays dividend. Dividend score is nice. Efficiency, which is the margin, it's great. Overall rating is also great here. So with that, I would buy this company here. No big deal. And look, max drawdown is 17%. And right now they're already down about 10%. It's very close to their max drawdown in 1 year. And max drawdown in 5 years is 43%. I think it's in a very good shape at this time. I would be slowly acquiring this company, and it can be a very, very good bounce from these levels here. All right, now from a numbers perspective, look, very nice earnings per share. It's growing nicely, good clip here. Sales is growing nicely, so top line is taken care, growing nicely. From a shares outstanding perspective, I like this trajectory here. Shares outstanding is coming down. That tells you company is not diluting the share count. They are, really gradually reducing their share count, which is always good. From an operating margin perspective, look, they're trying to improve here, but it's not perfect, but it's a profitable company. Not bad, around $25 or so operating margin, not bad. Net margin perspective, the trend is not great, but it's positive net margin. It's also good. From a debt to equity perspective, look, from 2018 or 19 from onwards, this company has took on some debt. And I think they should reduce the debt load here. It's not too bad, but I would be looking at this debt load here. It's debt to equity ratio is less than 1, which is good. But I think they should control this going forward. Maybe they got some debt because it's a very low interest rate, but they should take care of this debt load as we go forward. All right, so now let's look at a few more details and look at the earnings history. From an earnings history perspective, look what happened. They missed on the earnings per share on the EPS side by a penny, and they also missed on the revenue side by $33 million. That's why stock came tumbling down. It's the revenue miss and EPS miss, and guidance was also tad low. That's why stock came tumbling down. From a revenue perspective, look, stock company was about $2.8 billion back in 2017. Now it's about $4 billion. They're nicely improving the revenue. And look, for the folks who are worried about all the issues around back in 2019 rate hike, I think company did pretty okay, not too bad here. They had, I think they did well during the last time during the inflation times back in 2018. Not too bad here. I think this company is pretty okay that way. All right, so now let's look at monthly performance metric. Look, we got 2022 here. We got all the months here from Jan, Feb onwards. This year stock is down 11%. And look, January down, February down, March went higher, April down. Pretty much it's a down year for this company here. But look, 2021 was a great year for Infosys. 2020 was great. 2019 was great. 2018, when there is a huge issue on inflation, company did very well. That's why I think it's a good company here. It's really down at these levels here. It's a great time to buy this profitable company. This company proved to be a very good from a performance perspective, even during 2018 when there is a high inflation. So that's why I think it's a good one to buy. This company knows how to operate in the high inflation environment. That's why it's a good one to slowly accumulate. All right, now let's look at the chart. From a chart perspective, look, Infosys stock has been doing great. In 2022, it's trying to see where to go here. Look, there is a nice support level somewhere here, and around $21 is the good support level here. That's why I would start accumulating at these levels here. And now let's look at a little bit, smaller chart here, which is a 1 day, 1 year chart. In a 1 day, 1 year chart, look, there is a nice support level here. We got upper level right here, lower level right here, and stock is trying to just came below the lower level here. I think it's trying to touch this 20 level, 20.50 here. I think from this point onwards, it's good to accumulate and go from there. Momentum is down, which is the case when the stock comes tumbling down. And look, even implied volatility went higher. Now it's trying to cool off, which typically happens after the earnings. And right now, look, in the DMI chart, red line is jumping higher, blue line is jumping low. It's saying, hey, I'm bearish. That's when you have to buy this company. Fundamentally good, technically bad. That's when you buy the companies like Infosys and accumulate. Look, people are selling the company. Smart money is right now going out. I think it'll come back again. I think it's a good time to slowly start buying this great company. All right, now let's look at Bollinger Band. Look, from a Bollinger Band perspective, earning number one here, it came and touched the lower band. Earning number two here went higher, hardly came, did not even come to the middle band here. Next earning here came and touched the lower band, went higher. One more earnings right here. After the earning came down and touched the lower band, went higher. Now earning came all the way below the lower band. So if you look at the history of this company, it typically trades wildly around the quarter end, but then it manages to go higher. That's why at these levels here, look, there's a big red candle here. You should probably start buying at these levels here. It will be very good. Maybe in a quarter or two, you'll make some good money here. All right, now let's look at option chain. From an option chain perspective, look, stock price is about $21. After the down here, $1.38 here. All-time high is 26. There's a good, $5-6 from the current stock price. And look at the current stock price, $21. There is a 25 open interest, but look, as you go higher, 23, 24, 25, look at the open interest here. Folks are buying out of the money call option. That's why they're betting the stock will go higher to 23, 24, 25 and buying boatload of options at a lower price. Look, for these, it's a pretty much low price here, 50 to 65. They are paying pennies here to buy this great company at a higher strike price here. On the put side of the house here, open interest, it's not much at all compared to call volume. Put volume is not much at all. That's why it's a bullish in the option market. And as you look through the option statistics here, look, 2,500 call options traded and 3,000 put options. Looks like if you look at this number here, there are more puts. People are hedging and buying the put option just to make sure they don't get burned on the lower side. So look, overall put call ratio is higher than 1. Sometimes this can be treated like a contrarian indication. A lot of people are buying put options, and if that happens, typically stock can go around and make sure folks who bought put option lose money. That's why it's a contrarian right now. It's not completely bullish, but it's a contrarian type play because there are more people buying put options than call options. All right, now let's look at what should we do now. We looked at the fundamentals, we looked at the technicals. Look, Infosys, it came down after the earnings, 3% down. They missed on the revenue as well as earnings. And I think they did very well. It came a penny below the estimate here. But on the year over year, they did very well from a bottom line perspective. Bottom line improved by 9.2%. And their revenue also increased, as you see here, from 18.5 to $4.28 billion year over year, but slightly missed the revenue estimate, as you can see here. But they did very well from a constant currency perspective. They're also winning the large deals, as you can see here. That's a good catalyst here. And they've added 11 clients during third quarter. That's also a good number here. And signed multiple contracts with a deal worth of $2.53 billion. That's a good deal here. All right, their digital and the cloud revenue is growing at a nice clip here, 23% margin. That's a good one here. And with this, they also give some guidance here, 13% to 15% growth here in 2023. I think Wall Street maybe was looking for a little higher guidance here. That's why stock came down. The main culprit is really they missed the Q4 earnings and the revenue estimates, and guidance were tad lower. That typically does a number on the stock. That's when you buy the company. And I say, take advantage, buy this short-term pullback. It's a profitable company. This company has navigated multiple downturns in the past, and this one is no different. I think it's a good one to buy. It's a rock-solid company from a financial perspective, and also it's growing nicely. So with that, thank you very much. Happy investing and trading. Please subscribe.